round two. So what were you saying before you got cut off?
All right, so let's get to the FHA guidelines. All right. As we all know, coronavirus has just been killing things literally in the marketplace for all businesses. People are getting shut down left and right. I'm not sure if people on this live know the extent of the damage it's doing behind the scenes in the mortgage business, in the real estate finance business. So early in the week, there was probably all the banks, well, I'm not going to say all, the majority of the major players that were in the non-QM lending space, meaning bank statement loans, self-employed loans, asset-based loans, even hard money loans. Um, Majority of those lenders have either imploded, stopped funding until further notice, or they're just jacking up their interest rates and completely changing their guidelines to make it extremely tougher. So that non-QM mortgage existence right now. Now this week, there's been tons of banks. I mean, tons of banks that have either, and I'm talking big banks, the big boys that everyone probably knows, the Wells, the Chases of the world, all the big guys. A lot of the big banks have completely pulled back from doing FHA loans, or they're raising the interest rates so high that they're discouraging people to do FHA. A lot of banks, mortgage companies, and mortgage brokers, their guidelines have changed. So previously, we all spoke about 580 credit scores for FHA. You know, that's all you need, minimum credit score. Well, that has changed. Effective this week and effective Monday, there's probably a good 100 banks that all raised their minimum FHA loan requirements. Some banks raised it to 640, while others have raised it to 660. Now, there are still a handful of banks that still will allow you to do an FHA loan between the credit scores of 580 and 640, but they're requiring more of a down payment, or they're requiring cash reserves, at least 6 months of reserves. But in general speaking, majority of the lenders out there have pushed their FHA minimum credit score requirements up to a minimum of a 640 credit score. And on top of that, if you have a debt to income ratio that's over 50%, so debt to income ratio with FHA, we can typically go up to like 56%, 55%, depending on the lender. But anything above that 50% mark now, they're requiring anywhere from 2 to 6 months of reserves. Reserves, for those who don't know, is your mortgage payment post closing. So if your mortgage payment is $1,000, if the lender requires 6 months reserves, then you need $6,000 post closing, right? It's going to get tough for folks out there who are 401k definitely still starts. So it doesn't have to be liquid reserves. You just have to be able to access it with your 401k. So a lot of lenders are just now cutting back because of the impact of coronavirus. The liquidity in the market, although this 2 trillion was just passed, and the Federal Reserve has like an unlimited check to buy bonds, but on the back end, what people don't realize is that mortgages are sold on the back end on a secondary market as bonds. And if there's no investors, if they don't feel comfortable with buying that type of paper, then banks won't lend to it because they know they can't sell it. And that's what's happening. The anxiety with the uncertainty that's happening in the marketplace, investors on Wall Street are now starting to pull back from certain investments, especially because that 640 credit score and under typically has a higher default than people who have above 640 credit scores. So now when you couple default factors plus coronavirus, millions of jobs being lost, millions of businesses that's going to go out of business, banks are making heavy credit changes to their guidelines. So if you are someone who's been looking for a home, maybe you've been pre-approved over the last couple of months and your score is below 640, you need to get your credit right. in order for you to get financing. You know what I'm saying? So it's gonna get a lot worse out there before it gets better in the mortgage space. This is something that I've been telling people for months now, that you have to prepare for the worst. And all the people who was sitting here talking about recessions last year, oh, we're waiting for the recession, we're waiting for the recession. And I kept on telling you, you don't want a recession because it ain't going to be sweet. Well, these are some of the things that happen. Credit changes, things happen. Banks are going to start protecting themselves even more and more now. So you guys got to really start preparing for this. If you are looking to purchase real estate, you cannot wait for when you think you're going to be ready. You can't wait for this arbitrary credit score that I hear people all day, oh, I got a 700 score, I want to get 800. Dude, you need to buy now. If you want to buy real estate, banks don't have to lend. And I don't think people really understand that. They want to lend, but when there's things like this happening, they get nervous. And investors, most importantly, investors get nervous. So these FHA changes, again, for those who are just checking in, most banks have raised the credit score to 640. A lot of banks have went up as high as 660. Minimum credit score used to be 580. There are still a handful of lenders that will still fund a deal today between 580 and 640. But Monday, that can change. You know what I'm saying?
Shout out to Kiana Watson on the check-in.
Shout out to the Queen of the South, Kiana Watson, on the check-in.
So what are some tips that you can give, like somebody that's on the fence? Like,
the tips is get off the fucking fence. Like, sit on the pot or get off the pot. Like, make a decision. Like, you got to do something.
But what if, because me and you talked about this, and it's like, I feel like there's going to be a housing burst soon.
Of course.
And values are going to go down. So is it a good time to buy now?
Hell yeah. It's a good time to buy. And I know what you're going to say, because you have a feeling, or you have an opinion about the housing market. We all have different opinions, but that's the great thing about opinions. We all have them, but no one knows if it's going to be true or not. And if the housing market does go down, I can say my opinion is interest rates will skyrocket, right? So when we do, you know what we should do? Because I know we was going to do a live at some point. We should do a cost of weighting analysis. I kind of put one on my YouTube the other day, but we should do a real-time one. So that way we can show people, like, look, if the rates are X, Y, and Z today, and the home prices are this, but let's see a year from now, let's project if the home prices go down 15% and the rates go up 1%, what does that look like? What's going to be the better deal? And when I did that on my YouTube channel for people, when you look at the numbers, it's basically the same. Even though you're getting less house, but your rate is higher. So over the life of the loan of 30 years, when you break down the numbers, you're not saving nothing by waiting for the value of the home to go down 10, 15%. Because if the rates jump up, then you're back in the same position. You know what I'm saying? So my opinion is, if anybody who has job security and they're comfortable with the job security, they have reserves. Not just because the banks are requiring it, it's just because you need reserves, especially if you're buying a multifamily housing and you have to depend on tenants. You should make sure you can really afford a house right now. You should always make sure you can afford a house, but people just don't care. You know what I'm saying? But now more than ever, you better make sure that you're financially fit and mentally ready to buy a home. So I do think if your goal before Corona was to purchase real estate in 2020, you should still stick with that goal, because money is cheap, and you can't get any cheaper than what it is right now.
Interesting.
Me personally, I'd rather have a house that's $400K with a 3% interest rate than a house that's $325 with a 5.5. Me personally. Now, if we get deeper from a tax perspective, the 5.5 rate will still be better because you got the mortgage interest, but we ain't gonna go there. We'll save that for the private group.
So you still bullish on real estate?
Of course I'm bullish on real estate, because real estate is king. You know what I'm saying? Like, What Wall Street Trapper say? Shout out to Wall Street Trapper for the hoodie too. But
Yeah, shout out to Wall Street Shop.
what does Trapper always say? When they panic, we eat. So like for me, this is a great time. It's turning right now into a buyer's market overnight. When you really think about it, like it's been a
And Wall
seller's
Street Trap.
market.
Well, I mean, Jay Morrison said something on the podcast that's out. That's out today. Shout out to Jay. The live podcast is out right now on all platforms, and he had mentioned because it's like okay, um, when people get laid off, and that if the economy starts to turn down, it's going to be bad for landlords, right? Because people can't pay rent. But if the economy turns down and then banks tighten up, people can't get mortgages. More people will have to rent.
Yeah. You
So
win either way. You know what I'm saying? Like you win if you are a landlord and you have property and credit gets tight, like you said, people got to rent. So they're gonna want to come to your nice apartment to rent it. You know what I'm saying? Like it's a cycle, man. This is all cycles. The problem is people have been spoiled because money's been so cheap over the last 7 to 8 years. Home prices have been appreciating at record levels. To me, this home prices have appreciated more than it was during the Wild Cowboy days. You know what I'm saying? So like appreciation has just been off the meter, but the same rules apply. You never should buy rental real estate for equity. Number one, you should always buy rental real estate for cash flow. That's first and foremost, but people are just so blinded by quick money, and it's everybody on here talking about you can do this with no money, do this and bad credit. It's all, and I've been saying this for the longest, it's all bullshit. You know what I'm saying? Show me the banks that will give you a loan with no money and no credit. I'm happy to sign up. You know what I'm saying? I'll write 100 loans a week if that's the case. But the same rules apply. If you buy rental properties, make sure you have reserves, make sure you can pay for the mortgage, and then you buying for cash flow. Long-term play. Real estate is not 1 to 2 year play. That shit is a 5 to 10 year, 20 year play, and it must be treated accordingly. It's just we've been spoiled, Rashad. That's all.
yeah, yeah.
And it's a lot of the folks who never went through this, right? See, so for me, people ask me, yo, why you like this? Why are you so calm? Because I've been through the worst recession ever. Besides the Great Depression, the Great Recession was like, I literally was a victim of it because I wasn't educated, because I was young, dumb, and full of cum, and I didn't know anything. You know what I'm saying? There was not platforms like Earn Your Leisure. There was not platforms like Instagram out there or YouTube where you can really get the education so you won't make mistakes. This is why I love being a part of EYLU, because we get to educate at scale. You know what I'm saying? And we get to leverage our opinions and our intellectual property and talk to our community in a language that they understand. So you guys are so lucky that you have people like us around that is willing to give this game out for free. And if we do charge, it's still for free, basically. You know what I'm saying? So ultimately, at the end of the day, take advantage of these opportunities that's in front of you. When there's blood on the street, people get rich.
Yeah.
Period. So you got to take advantage. Like when they panic, you got to eat. That's the mentality. You can't be scared of this. So should you still buy a home this year? Absolutely. Just be super smart. If you're going to buy rental real estate, be super smart. You probably don't want to go ahead and get the bartender right now as your tenant. You may want to try to get the cop, or you may want to get government programs like Section 8 right now. So you have guaranteed money. You know what I'm saying?
Or get a
So
nurse. Get a nurse.
get nurses, healthcare workers. Like you just gotta be smarter. You just can't be taking anybody to come into your apartment right now. So just be smart. The same rules apply. Don't over leverage yourself. Don't be house rich and cash poor. This is the same shit we've been saying since last year, but now people are really now starting to pay attention to what we were saying. People just let that go over their head and they only heard, oh, really? I can get an FHA loan with a four family? Like, did you hear anything else I said? They don't
Yeah,
hear it. You know what
yeah,
I'm saying? So it is what it is, man. I'm loving my life right now.
yeah. I know. It's a lot going on in your industry for sure. So everybody trying to refinance and take. They scared that the rates is going to go up.
As they should. Look, the bond, someone asked me a question today, right? They was asking me like, yo, since the feds are dumping so much money in, why haven't interest rates dropped below 3% yet? I said, well, think about it. In a week from now, no one's paying their mortgage. So why the hell would they lower the rates? They gotta make up for the losses. Like people think, and this is when people I personally hate the way the government came out with these forbearance agreements and everything like that, because it just caused so much more panic for homeowners, for tenants. Like, I think it was just the way they did it was terrible, how they put the information out. But what people don't realize is that just because you're a homeowner and you're putting that money on the back end, that's actually bad for banks, because banks still have to pay their investors on the secondary. Um, they still have to pay property taxes. They still have to pay homeowners insurance. Who's paying for all of that? So you got to think about companies like Quicken Loans, for example. Quicken Loans is a non-federal bank, so they don't get access to government this stimulus package. You know what I'm saying? So who's paying Quicken Loans bills? If they service 1 million clients, right? Think about this. And if 250,000 of them decide not to pay their mortgage next month, that could bankrupt a company. Who's paying the mortgage then? Who's paying the investors? Who's paying the property taxes? They can't get stimulus money, so who's going to give it to them? This can get really scary.
Yeah. If this thing, like I told Ian on the last hour, if this coronavirus doesn't get cured by summertime, we're really.
Nah, banks don't have liquidity. Don't get it twisted. Don't let this. And there was a post that I think Aisha Sheldon put out today, and it was so true. Tenants live paycheck to paycheck. Homeowners live paycheck to paycheck. Corporations live paycheck to paycheck. We're all fucked. And it's the truth.
But there's different kinds of liquidity. Banks have liquidity as far as having money that they're supposed to have. Like
yeah,
they're gonna make sure that but that's different from them having $20 billion in mortgages and people starting to default on. That's what happened in 2008. That's why they had to get bailed out. Like, that's a different situation than just not having enough money to actually pay when somebody goes to the ATM machine.
Exactly, and people don't understand that, man. Like, you can't.
The average American doesn't have $1,000. 70% of America does not have $1,000 in savings. And
think about this: a bank or no one can have enough reserves to predict a pandemic, a health pandemic, and the government or government officials just out of the blue just start saying you don't have to make mortgage payments for 3 months. How do you plan that? You know how many people who have money are taking advantage of this?
Yeah, but
they didn't suffer anything. And I'm like, shit. Like, me personally, I don't think you should. If you don't really need it, I think it's like welfare, man. People abuse the welfare system, and the people who really need it don't get it. You know what I'm saying? To me, I look at it as the same way. Like, if you don't really need the money, like, yo, I don't think you should take it. Personally, I think it should be reserved for people who really are affected by this. I mean, you got some people that have hundreds of thousands of dollars in their account, and they're still bringing in income, and they're taking advantage of this. Listen, more power to them. I can't knock nobody's hustle, but to me, I just don't think they should. But personally, if you need it, take it. But look at the terms of it too, because a lot of banks are saying after the 3 months, you have to pay the 3 months up in full, month 4. So if you're gonna do this mortgage relief, make sure you read the terms and conditions very carefully, because a few of the terms that I reviewed for my clients today, they was about to sign that they was about to pay a lump sum come July. And they don't have that type of money, you know what I'm saying? Because they're not going to save the mortgage money. They're going to spend that shit.
Yeah.
You know, so long story short, man, the same rules apply like it was last year. Don't be cash rich, house rich, I should say, and cash poor. Work on your credit. Now the banks are now forcing people who want to take out FHA loans to work on their credit. You need a minimum of 640 credit score, pretty much across the board from the majority of the major lenders. Now they're going to make sure you have reserves, at least 2 to 6 months of reserves. A lot of banks went up to 660, and a lot of the big banks have just stopped doing FHA loans, period. So, and next week, you're probably going to see some changes to conventional loans too. Now, also another thing, conventional loans last year stopped letting first-time home buyers use rental income to help them qualify for mortgages. And I did a market update on my YouTube page behind this, and I told everyone if conventional did this, if VA did this, FHA is going to follow suit. So don't be surprised in a week or two if I come to you guys and tell you, hey, you can't use rental income no more to help you qualify for a mortgage with FHA. So they're gonna make it real tough for people to qualify for homes moving forward.
Whole lot of game right there. And once again, this is just a preview of kind of the market updates and a lot of information. And like I said, we was going back and forth for weeks about creating a more engaged platform for like people that's really, really serious about becoming real estate investors or established real estate investors kind of network. So we launched a private Facebook group as part of EYL University. And that all the information is on EYLUniversity.com. And yeah, the private Facebook group, once again, for anybody that has just joined, can you just tell them what to expect? That's going to be, because you're going to be leading this up, and it's going to be dope. So what's going to be in the private Facebook group for
Well,
EYL?
for one, it's gonna be daily updates. There's a lot that I don't share on social media because it just comes out so fast sometimes, and honestly, I don't want to go over nobody's head. So some stuff I just don't post. But there's always changes. So if you're part of the Facebook group, you will get the change as I get the information. You guys will be the first to know. Now, majority of that information, market updates, obviously it will be general public knowledge, but it'll be a source in the group because you guys really don't know where to look for it like I do, because this is what I do. You know what I'm saying? So I'll be able to give you guys an update as soon as things happen. You'll have access to my entire network, whether it's realtors, attorneys, whatever it is. I got you. We're gonna have special classes in Facebook Lives just for the private Facebook group. What else? Mentorship, coaching. A lot of people have questions and concerns. I'm actually going to stop doing Q&As on my Instagram Live and my YouTube Live, and it's only going to be reserved for the private Facebook group. So if I do an Instagram Live, and if you're not a private member, then you won't be able to get on the Q&A sessions when I do it for YouTube Live. So we're just going to throw a lot of exclusive content in there, a lot of one-on-one training, coaching, mentorship. And that's really, I think, look, man, how much is this shit? 19 bucks?
19.
That's like 50 cents a day for the amount of knowledge. Think about this, right? People out here offer real estate coaching and mentorship for thousands of dollars. Just really think about, I just told you, you can have that same, whatever they were going to offer you, I can give it to you and more for probably less than $250 a year. To me, you guys, if you've been following me, you understand my level of expertise. You understand I don't fuck around in this. This is what I do. I eat, sleep, shit, real estate financing.
And yeah, I just seen a couple. So how you join the group is pinned. You go to EY, do not request to join the Facebook group. You go to EYLUniversity.com and then you sign up via there. If you're an EYL University member, you have access. We'll send emails to all of the members about how they sign up. No, we're not. So don't go to the Facebook group and request it. Go to EYLUniversity.com and sign up for it. That's how you do it.